Okay, so chapter 9 is one of the more difficult chapters for students sometimes to understand because we need to do something called adjusting and closing entries. And in your worksheet, you did learn about adjusting entries to supplies, expense, and prepaid insurance. Now, just a reminder that the worksheet is not a permanent record, so what we need to do is to take these adjustments that we've already made in the worksheet and put them into our general journal. Okay, so the top part here, I have just taken this right off of our worksheet. You see supplies has a credit of $9.85, supplies expense, debit $9.85, prepaid insurance credit $110, and insurance expense debit $110. So that is nothing new. Now we need to go to our general journal, and you're going to write adjusting entries. So I'm right here. And all you need to do is list exactly what you have up here by putting the supplies and supplies expense together and insurance expense and insurance together. It doesn't really matter which order you put these two in. The textbook, though, will always put the debit part first. So that's why you see supplies expense, debit $9.85, supplies credit $9.85, insurance expense debit $110, and insurance credit $110. So all we did was take the information from the worksheet, put it into our general journal, which then we're now going to go ahead and post into our general ledgers a little bit later. Okay, so adjusting entries is nice and easy. The one that sometimes gives people a problem are the closing entries. Revenue, expense accounts, income summary accounts, and owner's drawing are all temporary capital accounts. You didn't really know that before, but I'm telling you that now. And what this means is that for every month that you're doing your books, you want to know exactly what your revenue is, exactly what your expense accounts are, your income summary, and your owner's drawing. You don't want those to be tallied up over a year long because it'll be really hard to tell if your company's making money. So what our goal is to make journal entries to clear those balances, so that when you start the next month, all of those temporary capital accounts have a balance of zero. Those are called closing entries. Okay, so if we had to take everything and put everything into our capital account, it would be really cluttered. So we've created a new account called the income summary. And you would have noticed that on your worksheet, but up till now we've never used it. It's always been blank. Well, here we go. We're now going to start to use our income summary. And that account does exactly that. It summarizes our income. There's 4 very important steps to closing entries. Close all your revenue accounts first, and then I want you to post to the ledgers. Close your expense accounts and post. Close your income summary and post. Close your owner's drawing account and post. And I'll show you what that means. Okay, so I'm going to take these and we're going to do them separately. The first step was to close our sales. So you look, this is coming right off of your worksheet. So if you look at your worksheet, look for your sales. Right now you have a credit of $3,199. You want to make a closing entry in your general journal to close it. And when you're doing these, I want you to think close and transfer. So if you have a credit of $3,199, you need to close that account by making sales have a debit of $3,199. So we've taken care of the closing part. We now need to transfer. So we don't want to forget about those sales by just closing them. We want to transfer it. And the place that you're going to transfer it is to your income summary. So you're going to have a credit of $3,199. These two will always be opposite. One will be debit, one will be credit. Okay, and then you have to remember that once you write this down, you have to go to those ledgers and you have to post the debit into sales and the credit into income summary. Okay, so that's step 1. Sales is now closed. Okay, now this still is coming from your worksheet. Step 2 is to close your expense accounts. So right now, if you look, I'll just circle all of these. These are all your expenses. They all have debit balances. So to close them, we have to have a credit transaction. So I'm going to move this down. So you see that all of your expenses are listed here. You have to list them individually. And you're putting all of their amounts to the credit column. So what you've done now is you've closed them. So what we have to do now is transfer. Okay, you're going to transfer the total, $1,722, into the income summary, and that's going to be a debit. Okay, you do that, and now you post. You need to post individually to the advertising, equipment repair, insurance, miscellaneous, rent, supplies, and utility expense, and then just one total into the income summary, $1,722. That's step number 2. Step number 3 is to close your income summary. So if you were to post in your income summary, and you can actually find this on your worksheet as well. You see you had a credit of $3,199, and you had a debit of $1,722. That means you had a net income of $1,477. So in your income summary, you are going to have a credit amount of $1,477. To close it, you need to debit it. And you're going to close, which we just finished doing, and transfer. Sorry. You're going to transfer that to your capital account. Okay. Okay, and you also need to close your drawing account here as well. So your Harry Walters drawing, if you were to look on your worksheet, you would have a you'd have a debit of $1,000. So to close it, you have to have a credit of $1,000. And then you're going to transfer that to the capital account with a debit of $1,000. And then make sure you post that as well. Okay? So now, if we put it all together onto one general journal, it's going to look like this. Sales, closed, transferred to income summary, and post. Close advertising, equipment, insurance, miscellaneous, rent, supplies, utility. Transfer that whole total to the income summary. Now, if you did remember to post here and post here, you now will have a balance in your income summary. So what you need to do is close it. So this transaction will close your income summary. This transaction will transfer it to the capital. This transaction closes the drawing. This transaction transfers it to your capital. And then make sure you post these as well. Now, to make sure that after you've done posting, you can also look in your textbook. Page 154 to 157 shows all of the general ledgers that you've posted to. I just didn't show you on here because it would take too much space and time. So after you're done all of your posting, everything is done for the whole month. You need to do a post-closing trial balance to make sure that everything that still has account or money in their accounts is going to still be balanced. So at this point, only your assets, cash, and supplies should have balances. Your liabilities, Dixon Company and Top Supply Company, and your Harry Walters Capital. And make sure they balance, and then you know that you're ready to move on to the next month. Okay, and then that's everything in a nutshell. So that's actually the hard part done there for you.